Okay, welcome back. The market, I think, is not building on gains. It's given up some, I think, about 20, 25 points from the highs of the day. But still, this is a pretty good outcome overall. 70 points nearly, 22,100 is around where the Nifty is trading at. And of course, broader markets have also paired losses. And their mid-cap and small-cap indices, I think, are still down, but just a little bit. And market breadth has become even more positive. 1,400 stocks are higher, 1,100 stocks are lower among the actively traded NSE stocks. Rupen Rajguru is with us. He's head of equity investment and strategy at Julius Baer. Rupen, good afternoon. Good to have you with us here. Thanks for your time. And I think we're speaking after that correction that we've had in mid and small caps mostly. And the sharpest since this rally began in March of 2023. But let's just talk about, I know that you prefer mega caps, large caps. That's top of the list, right? But you're not averse to small caps and mid caps as well. But what exactly, in terms of themes, etc., are you bullish on? Are you looking to buy? So, for example, cement is something that you like post this correction. There are other sectors as well we'll talk about. But within the ones which have fallen, I mean, does anything anything you've been able to identify, pick? If you can talk about specific names.
Sure. Hi, Prashant. And in fact, probably beginning of this year, everybody was expecting a correction in small and mid cap. And, as I would call this is rather the most anticipated correction in the small and mid caps. Here, particularly about the sector which you mentioned, like cement as a sector is something which we have been liking from a medium to long-term perspective. In last 1 month, it has seen a decent correction. A lot of the names are down 7 to 10%. And in a long cycle, always there are short cycles and in which market reacts to. So in the current scenario, the pricing has been soft. And because of that, the Q4 might be a soft quarter. Probably a month back or month and a half back, everybody was expecting a strong Q4, but the Q4 might be weak, and hence the stock has corrected. But if you look into the picture, what themes or what sectors we like is that we like those sectors which will have a decent top line growth. And by cement, I mean the volume growth of cement for last 2 years has been higher than the nominal GDP. Probably the next year also the volume growth will be higher than the nominal GDP. So if the pricing discipline remains, which is what we expect, notwithstanding the current softness, we expect the top line should be good. And also at the input cost side, it should be quite benign. So hence we expect a decent FY25 from cement companies. So we like cement as a theme. The other sector which probably has not done as well in the current market scenario are the large private sector banks. And probably it is now more or less a consensus trade amongst the fund manager. And we are also on that camp, and we believe mega private sector banks is something which has a relative value in the current market scenario. So these are the two big themes which we like in the current market scenario. And then there will be always bottom-up ideas across the sectors is what which we like.
Right. That's interesting. You do like the private sector banks. Just wanted your thoughts on a couple of IT names, because you did see that IT could perhaps be one of the dark horses. So have you updated your thoughts there? What do you have to do there?
Hi, afternoon, Mangalam. So in IT, probably, there is this, if I were to call the Q3 results, so IT was one sector which came out with pretty weak set of numbers, but the stock did exceedingly well, particularly a lot of the large cap names. And banking are the one in which the numbers were pretty strong, but the stock did badly because the expectation is that the next year there will be NIM pressures and there will be challenges on the growth side. So IT, I believe that the large cap ITs are probably fully valued. So I don't see a huge upside in those large cap IT names, because now in the pricing, everybody is expecting a recovery in FY25 vis-a-vis FY24, because from a numbers perspective, FY24 was kind of a washout number. And I think for 5 or 6 consecutive quarters, we have seen the IT hiring also going down. probably there are interesting ideas in the smaller IT names while they are on valuations, but the growth of some of the small cap or rather mid cap IT names which are specializing in the have a strong growth. And in a scenario in which, when the overall large cap IT is not posting decent growth, some of these names will be preferred. At an aggregate level, we don't like this sector, but between the two, probably we feel there is some bit of juice in the mid cap names, specifically on the ER&D side.
Got it. Rupen, afternoon. You don't like the residential real estate players. Is this a recent development where you've turned cautious? The developers?
Sure. Hi. Afternoon, Reema. So, real estate as a sector from the lows, probably COVID lows, on an average, the stocks are up 5 to 10 times, depending on what kind of stocks you're looking at. And as a cycle, probably we are in that mid-cycle of the entire real estate story. So what's happening now is that incrementally, if you hear the commentaries of a lot of the players, the ratio of so-called investors stroke speculator vis-a-vis the genuine end users, that ratio is slowly going up. So probably it was 2-3%, and it's now up to 10 to 15%. And in some of the markets like Hyderabad and Pune, that ratio has gone up significantly. So there is clearly people are betting on the price hikes out there, and that's where we see some of these elements out there. So as a theme, we like the theme, but we believe the better way to play the entire real estate boom would be home improvements companies, because they typically move up after a 1 to 2 year lag. In fact, the largest adhesive company also spoke about 2 years after the real estate cycle, they are seeing a big boom in their market. So at a margin, we would prefer home improvement companies, consumer durable companies to a real estate companies, because that's where we believe from a pure stock market perspective, there is a better valuation vis-a-vis the real estate company at current juncture.
There's another space, right? The QSR space, Rupen, that you like. What's the top idea there?
So, Prashant, I'll refrain from talking about stocks, but if I were to look through, QSRs were darlings 3 years back, and today probably it is considered, I think, just before our conversation, Mangalam was referring to, I think, slow or moving services or something like that. So here we have always seen in a 5 to 7 year cycle, there are periods of 1 to 2 years in which there is slowdown. Very difficult to fathom the reason behind the slowdown. It can be higher competitive environment, it can be higher inflation, but at a big picture level, the story remains intact. And in fact, some of the large QSR companies, in last 1-2 years, they have continued their focus on network expansion. So they are increasing their footprints into various geographies. At the same time, they are also, some of the companies are improving their entire back-end system, and they are improving on their efficiencies. A lot of commissaries and all are getting developed. So they are preparing for the next leg of growth. So we have seen it historically with a lot of these QSR companies. While some of the companies don't have that long enough track record, but the company which has the longest track record as far as the stock market is concerned, we have seen this cycle play out in the past, and we believe that the kind of investments they are doing, when the cycle kind of turns, we will see a huge growth in their overall earnings. So at a sector level, we are constructive on that sector, and probably the largest name is something which looks pretty interesting at current market price.
The counter to that perhaps would be that why is one looking at just one company and a few brands in one QSR when one can go to one of these platforms and get access to the entire basket of restaurants which are there? And that's reflected in the kind of price performance that we've seen in Zomato versus the other QSR players as well. And that's reflected in the quarterly growth run rate as well. What would your thoughts on that be?
Yes, in fact, Mangalam, if I were to turn it around and say probably a year back, the story was very much there. But a year back, the largest listed food tech company was probably 1/3 of the current market cap. And, people were always having a narrative in which, they were questioning the overall growth prospect out there. So yes, you're right that the competitive intensity has gone up, and thanks to food tech companies, the access to a variety has increased as far as the customer is concerned. But what we have seen historically, some of the large brand, when they expand their footprints, they get into tier 2, tier 3, tier 4 cities. And again, if I were to compare some of these companies vis-a-vis the footprints they have in China, probably in India, we are at, probably 1/10 of the number of stores which, they have in China. So have we exhausted that? The answer is no. So I would call it, always competitive intensity will be there. And then if I were to draw an analogy, probably 20 years back, with some of the FMCG companies also, when an incumbent competitor comes through, they were questioning the growth of that. But we have seen that those companies, come up and recover pretty fast. So to answer your question, do we see exhaustion in the entire category? The answer is no. There is definitely a slowdown, and probably in hindsight, historically, we have seen in a business, if our hypothesis that this industry will be much larger in next 10 years from what it is right now, corrections like these are historically always been a good opportunity to add into those.
Rupen, thank you very much for joining in. We need to slip into a very short break. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We also get you a few BTST calls from our experts.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.